Good turnaround Tuesday, everybody. Hi, Brock, Ren. Hello, Kevin. Valera, nice to meet you. Good morning, Didier, Hugo. Hi, Arena. By the time I got to Woodstock, we were 500,000 strong, and everywhere there was song and celebration. Who wants to go to Woodstock with me? Anyone else have a pandemic haircut? You guys want to go? All right. Anyway, what an edge it is to be in face. Blake kept me out of trouble yesterday when I was getting all bulled up in Euro pound. Said, Dale, wait till we get over 90. Then we were here. So there were better entries and, still hasn't proven itself. And then Blake's bias chart and calling 3,600 a very major area. Look at that. Came right off this retest. So, I had a good day yesterday in the S&Ps before the rally. Had a couple of winning trades. Caught this on a sale Sunday night, took some of it, then sold this rally, took some of it. And then once we started trading, the 2-day off number was 3622. And when we closed, I said, Dale, put your bear claws away. I look like Boris Johnson. All right, I'll take his job. Anyway, what do we learn from yesterday besides that, really pays to be in face? That now we know the whole ball game in the S&Ps now is yesterday's low. Okay, so I'm waiting for either a new high that doesn't confirm or 3,600 there. Hi, Sinatra. Now, here's something I've been talking about for a week that happened while I was sleeping. So, I didn't catch a top, but I'm looking to sell rips. What's this? I'll give you a key. I'll give you a clue. Oh, and Stelios, went in for a third of his silver yesterday. So, could use that for, trying to day trade it. So nice entry on a third, buddy.
I actually got out today, but I'll tell you all about it.
Oh yeah, so
Yeah. It was so lucky, wasn't it?
Yeah, no, it was a nice entry. Okay, it's not lucky. Anyway, so here's the pound. What is this? Not an overthrow. It's a stop hunt. I kept going over this high here. We didn't take out here. So the shorts thought they had it, and there was at least one buy stop over 33.98, and they took it out by 7 pips, 10 pips. Classic stop hunt. So, I really think you could sell it anywhere and risk last night's high and cable. Hello, Michael. And I think that's it. I mean, also yesterday, Blake pointed out that we were a few points away from 78.6 in the Dixie, and that we could squeeze, and we did. Pull back so far, holding. We'll see. If it makes another new low, it's going to diverge. And then Aussie, after a 3-drive formation, which we had here at the highs, I think you could see it better here. Let me get rid of you guys for a while. See this? 1, 2, 3. First break. This looks like a failing rally to me. So I put out get short at 75, close enough for government work at 73.5. So I'd watch as Aussie. There's a lot of people. It was one of the weakest currencies yesterday when the dollar was bouncing, and it's still one of the weakest currencies today. All right, so we'll see. Maybe we could get an A, B, C, but I think Aussie and cable has topped. And Aussie, you have to be real careful if you're a bull and we start taking out this level here, which, a lot of people thought was a breakout. We're trying to hold it. But back under 73, I think you have a shot for 72 or lower. I think Grega last week was looking for one more high before we started a correction in Aussie. So, I mean, I just named, and let alone, Steve's work every day. So I guess the key question is right now, you guys feel the same way I do about the edge and all the things that help you. NASDAQ, yeah, NASDAQ very close to making a new high for XCal. So I'm going to let it happen. I don't believe we're going to confirm. This was, I believe, we didn't take the high out there. And this was Pfizer. So we're not going to confirm on the daily in either at new highs. S&Ps either. So maybe 3,700. I know some people talking 38, but I'm watching it. And the precious metals were the biggest. Tensions are rising between Australia and China. Okay, that could be a good reason. Tensions are going to, there were some hacked there was some hacked information from China about COVID and when they knew and how they handled it, etc. That doesn't look good for China anyway. And don't forget, Iran is on the table. Yes, we have an interview today, Quant Fiction. Brian will be with us. And that's it. So, who gets an edge in face? Give me a Y if you do. I know there's like 3 examples for me yesterday alone. Kevin does. Okay. How about someone who gets an edge in face but is not a subscriber? Anyone? Ingmar? Who wants a deal on a subscription today? You're welcome. Anyone want a deal on a subscription? Plant good seeds. That's how you want to say thank you to us for what we do every day here in Face? The way to reciprocate is to join. Who's reciprocating today? Okay. Then all I could say is you better not cry. You better not pout. You better not shout. I'm telling you why. Dale Kloss is coming to town. Okay. And I know where your stops are. I'll tell everyone else, and the black boxes and the machines will take you out. Anthony Aldridge, stepping up, take a deal. Okay. Joe Perry, are you around? Stel, can you post? There it is.
There you
All
go.
right, email.
Mind.
Thank you, buddy. You're like, so you're. There's a commercial where I think it's Tim Tebow and a star quarterback who says he's working on anticipation, and everything that's going on, he says something before it happens. So, yeah. So go ahead, Anthony. Just tell Joe you want a deal, and he'll work with you. and thanks for stepping up. You've restored my faith in humanity today. So, because you know what, guys? I like dogs more than people. How about you? Who likes dogs more than people? Raise your hand. All right. Anyway, Blake, how are you? Except for my team. I like my team as much as I like dogs. How you doing, Blake? How you doing, buddy?
Good morning. Hey,
Good
I was
morning.
just trying to find the mute button.
Oh,
How are you doing?
Okay.
You know, I have to admit, I really do like my dogs.
Yeah. I mean, you know.
and
I
and I
think that
and I and I like them. I do tend to favor animals over
people.
humans.
Yeah.
No,
Well,
I'm
they,
just-
you know,
I,
yeah, I know it's
well,
honest.
no, well, here's the thing. I am a dog lover. All
Yeah.
jokes aside, because they love you unconditionally
Yeah.
as long as you feed them. You know.
Yeah. That's it.
They're like, you know,
Anyway, we have a new member. Someone stepped up, and
awesome.
yeah. So
Well, we'll see.
I want to.
Who is it?
Let's see. Let me just scroll back. It's his name is. His name is. Oh.
Well,
Well,
we'll see
I'll
in the
see.
chat room. Who?
Oh, well, there it is. Anthony Aldridge.
Oh, good, Anthony. So here's our chat room, right? This is like the chat room that we're all in, chit-chatting around, and when the market's kind of slow like it is right now. This button right here next to your avatar is what gets you into the chat room. So make sure you click that, and that's you'll find us there all day. So welcome, Anthony, to the family. So I know you called it Turnaround Tuesday, but do we have any indication that it is going to be a Turnaround Tuesday today? That's the question, right, Dale?
Uh-huh.
Well, so the markets
last night. I think the pound turned, and it was Tuesday in Europe when it happened.
What's that?
I think the pound turned, and it was Tuesday in Europe when it happened.
Got it.
So
okay.
It was Tuesday somewhere, Blake.
It was Tuesday somewhere. Well, if you
Like
look at
it's happy
equities,
hour.
we're closing in on those highs. I did have a bullish S&P pattern in play, but yesterday when we pushed up against this new high, and the RSIs are divergent, and we held the 3600, which was pretty key
Great call.
support. Oh, thanks, from yesterday. Yeah, I mean, it was, it's obviously pretty important support. But coming back up here, I'm like, I don't know if I feel comfortable long risk at these levels. Now, that doesn't mean the stock market's not going to go up, because it is the stock market, and it seems like that's where everybody's at currently. And I'll tell you where they're not at is they're kind of pulling out of Bitcoin and Ethereum this morning. If you guys have not seen the moves in the crypto space today,
wow,
that's an hourly Bitcoin, that's an hourly Ethereum. And the problem with these charts right now is you've got like Ethereum's false breakout, now a possible double top. I mean, especially if you take out some support. I'm just kind of just freehand drawing here. Bitcoin, same thing. Test of the all-time highs. So you got to watch this trend line here. So I'm just pointing this out for those of you that trade cryptos. That's where a lot of the money has been recently. But the stock market, we are at highs. We are divergent. So you have to be a little careful with risk. It is Tuesday, as Dale pointed out.
What lit up gold, Blake?
Gold has had a great bounce from the 50% retracement. And if you guys, let's see here, Forex Analytics subscribers, basic technical for gold yesterday, the 50% retracement at the 1782 offered support as the lows today was at the 1764 level. If we can get back above the 200-day moving average, we may rally back to the 1840 breakout point. So we held the 50% retracement, we are back at the 200-day moving average right now. And so I'll write this down since we've got to put gold on our bias chart. But we're above 1800. The 200-day moving average is right at 1800 now. So I think we've got to. This is the area for if you're trading gold. I don't think you have an edge anywhere right now. You're on either side of the 200-day moving average. So selling it at 1838, I think, is the resistance there. And we had been bearish, right? I'm going to flip us back to range today. So support is the 50% retracement at 1762. So there you go. Okay, so we're already filling out the bias chart as we go. All right, so let's talk about FX and where we're at now. One of the things I have to point out about the end of month yesterday is the euro failed at the 120 level, and I know it was my edge chart of the day, or did I say edge chart of the day? That's old school. I didn't mean to say that. It's my old my chart of the day. I'm going to bring back the edge chart of the day, by the way. I think we're going to start calling it that. It's been long enough, and the guys, the old bank that bought us they could care less about FX. So I'm going to bring back the edge chart of the day. Do you know what edge stands for?
They don't own the word edge anyway.
No. Do you know what edge stands for?
Equal development, great entertainment.
Good. That's very good, Dale. You got it. Nailed it. Every day a good example.
Oh, wow. Very nice acronym.
Yeah, so we're going to do the edge chart of the day. I'll actually start that tonight, matter of fact. But the thing about the chart of the day that I pointed out yesterday was the highs held at 120, and we had a really, really nasty reversal candle. Now, I know it was the end of the month, but and the market was looking for dollar weakness, and dollar weakness actually hit the market before the fix, and then right after the fix, actually before the fix, like the error came out. So now, what's really important about the euro is we came back down to 1920, the breakout point right here, and so that is key today. So 1920, oops, sorry, 1920. That's key. Resistance 120. And I'm going to, I had put us on bullish. I'm going to keep us there unless we break through 119.20. We break through 119.20, we are going to go back to range, because there's so many dollar bears out there. And what I think is happening right now is we are developing just a big range. And we're eventually going to break higher. But I think the range looks something like this. And you have to be a little careful, because if you look at the dollar gave us a false breakdown as well yesterday. So you can see the dollar index. Look at this hammer that developed. Big hammer.
Higher low so far.
Yeah, I mean, and we broke below the 91.80, but did not close below it. So that means today is 91.50 as support.
It was 2 points away from 78.6. I mean, how much closer could it get? Yeah, and you pointed that out yesterday.
I mean, really close to the 78% retracement long term. Yeah. Really close right there. And Amanda was all over it yesterday in the chat room. She's like, yeah, it's the 78% retracement. She must have mentioned it about 100 times yesterday. 91, so 91.50 was support.
Yeah.
Okay. And so resistance today is going to be 92.10 if we can get above 92.10. One of the things I need to point out with the euro, though, I have to point this out, is European data was pretty good overnight. And that's, something that's going to keep the euro somewhat, elevated right now. you know, PMI data for the most part was better than expected. So that's something to just keep in mind as we go through, you know, today. So let's go over to, I'm sorry, I'm going to continue on because I want to get this done for the guys that are coming in. So here's the cable. Another failure at 134. Support right now is at 133, which we're on, but I think I wrote down yesterday, and let me just confirm that. I think I wrote down yesterday 132.80. I did. So 132.80 still will be support here. And we're going to keep that at range. 134 is resistance. Okay. And I'm keeping it in range because we continue to fail, you know, as we're approaching this 134. And we need some, you know, positive Brexit data in order to move the needle, I think, now. Aussie. So the Aussie, possible double top developing. RBA, they, you know, they didn't announce anything that was new or groundbreaking. So the Aussie, you know, 74-cent level is going to be key resistance, or 74.15 now. Okay. Support still is at 72.40. I'm trying to think intraday if we're going to get anywhere near that. I would venture to say no, but let's figure this out. Intraday, probably 73.15 is support. And then below that would be 72.40. I'm going to write down both just in case. Right, because the 72.40, well, it's actually 72.20, but we're going to write down 72.40 for the day. Kiwi. So the Kiwi is still an ascending wedge. 70.50 is resistance. 70 cents is support. RSIs continue to diverge there, so just have to be careful with the Kiwi, but it's still bullish. I mean, it is bullish. You guys know, while we're above 68 cents, but we could flip to, you know, if we get below 70 cents, we would flip to, like, you know, range bound for a while till we can get to the lower end of this to be bullish. But right now the Kiwi still looks pretty good. Okay. Dollar Canadian. Nice little triangle developing. Resistance be basically 130. Support, we're going to take the spike low at, well, let's just call it 129.50. So and notice how the dips were held yesterday. I mean, you know, we held this spike low. Okay. Now, it doesn't mean that it's bullish right now, but we are holding up. So, you know, just keep that in mind, you know, moving forward. Okay. The dollar Canadian continues to hold up, and even with stocks stronger, the dollar Canadian is really not, you know, as weak as it should or could be. Okay. Dollar Mexican peso. The dollar Mexican peso is holding up pretty well, and we've highlighted this on several occasions over this last week. Soon as the stock market had a little bit of a sell-off yesterday, the dollar Mexican peso ripped. So now what that means is the dollar Mexican peso is vulnerable for a continued rally if stocks are weak. So, you know, 2020 is going to be resistance. It feels like our life, right? 2020 is the resistance for all of us this year. So let's skip past 2020, please. Support is at 1994 or 1995. We've been writing. Okay. We're going to keep that in range. Dollar Canadian, we're keeping in range as well. All right, let's go over to the dollar Swiss. So I think yesterday we wrote down 90.20 resistance at 91.40, and we're going to leave it at that. All right. Dollar yen. I think we have a triangle that we're developing, but as you guys probably remember from yesterday, I'm so unmotivated in trading the dollar yen right now. 104.80, and support is going to be at 104 today. So if we can get down there, we might bounce from 104. Okay. And let's see here. US dollar to Norwegian krona. So yesterday we hit a new low. Relative strength was divergent. We bounced like a bat out of hell. Now, I'd been hoping that we bounce back to 895 to be a seller here. Problem is if we develop like an inverted head and shoulder pattern, which is possible, we could go a little bit higher than where we're at, or this resistance here. But I think 895 still is resistance. Support now is at 8. Oh, we can just call it 880, really. $8.95. That's key for the bears to hold. Okay. Last but not least, let's go over to the S&P. So the SPOOs. Like I said yesterday, or earlier, I'm sorry, I said yesterday. We hit a new high last night in Asia. I say new high. We rallied pretty substantially. We got to where we're currently at 36.60, and I'm like, all the RSIs were divergent at that point. I'm like, that was a pretty big bounce. In European trade, and I'm like, yeah, I don't think I really want to be on the long side of that after that big of a move. And we continue to move higher in Europe, but RSIs diverge. They're still divergent. So I think we got to be a little careful with, S&P longs here. Resistance is at 3670. Support is going to be 3600 again. So I think we still need to stay, we give it a bullish bias while we're above 3,600, right? So that means, while we're above here, above this 3,600 level, that's where you want to play on the long side. But I don't know if you really want to be long here. I'd rather be long down here than being long up at these levels, if that makes any sense. Like being bullish still seems like the right thing to do. It's just being bullish at these levels intraday. All right. So anyway, so your bias chart is finished. It's pretty easy. It's not too far off of what we had yesterday. And do we have any data coming out right now? Still is
Canadian GDP.
Oh, well, let's look at CAD.
It's always interesting. Yeah.
Let's see. Yeah. I mean, we are in this range. So let's see what the GDP numbers come in at. And whoops, here's your data flash, guys. If you're, oh, that's not what I wanted. There we go. Whoa. It's a little bit bigger than I wanted. There we go. Okay. But that's not what I wanted either. Hold on. Okay. GDP came in a little worse than expected.
Worse than expected, yeah.
Yeah. So the dollar Canadian getting a little bit of a lift here, but not much. obviously a little break above 29.80 should take us back to 130, but nothing too terribly exciting. Revisions were a little higher, so maybe that's what's keeping it somewhat capped. So good morning, Stelios.
Good morning, sir. Good morning,
So I was
everybody.
going to say, great trade on the silver market. What was it?
My
yesterday?
favorite. Yeah.
My goodness.
Yeah, I got lucky with that a little bit. I mean, the entry was great, and it's gone. I actually got out this morning, well, earlier today at just around 5% in under 24 hours. So I'll take that for any trade. Yeah, I guess the entry was good, and I see it stalling here. You know, silver's around 23.40 now, just going sideways. I don't know which way it's going to go, but I do think we have a dollar spike at some point coming. Is it going to be tomorrow or in a month? I don't know, but it's going to come, and I think metals are going to get a little bit pain when that spike comes.
So did you see the big moves in the crypto space overnight?
Yes, and now there's a big down move. I don't know what on the back of what it was, but I'm not trading them. I mean, they're just too crazy for me.
They're wild. I mean, this is just a 2% bounce. We were just trading at 570 in Ethereum. Now we're at 590. Bitcoin was just down at 18,100, and we're back at 18,800. Some huge moves here in the crypto space. I think it's a little bit more profit taking than anything, but still, I think
who is doing profit taking in cryptos? Are
What's
they
that?
all hodlers?
What's that?
I said, who is doing profit taking in cryptos? I thought they were all hodlers.
Yeah, they're all, I guess, holding on for dear life. I guess, it's interesting. I think that a lot of the fast money is in crypto, in the crypto space right now. So, I mean, there's going to be a little bit of profit taking, but overall, when you see the trend of institutions that are now starting to put their money into the crypto space, makes me believe that, dips are going to be fairly limited. I'd be surprised if Bitcoin drops below 10,000 again, to be honest. That doesn't mean it can't get down there, or maybe down towards 12,000 or 13,000, but I think that the downside will be bought on any of these cryptocurrencies now. So a lot of institutional money. I mean, there was in the past, but it's even becoming more mainstream. So
yeah.
So anyway,
yeah, it's the FOMO. It's the institutional FOMO, actually, in this case.
Yeah, but that money is here to stay too. So that's the other way to look at it. So how are you guys doing today?
Good, mate.
Very
How have
good,
you been?
Very good.
Good. I was mentioning this a little earlier, and I'm gonna say it with you guys here. These daily candles in the euro yesterday, the Aussie, that's a bearish engulfing. The cable didn't really do a whole lot, and the Kiwis, this is a pin bar, gravestone doji, a lot of bearish candles developed yesterday. So we may get some follow through today, probably over the next couple of days. But I think if you're long those, you have to be a little cautious as we're near range highs. You know what I'm saying?
Yep.
Yeah. So anyway, I just want to make sure I reiterated that.
My point of view. I really don't want to fade these trends. Not yet. I mean, yes.
I don't know if you necessarily want to fade it. I just think you have to be really careful while you're in this range. And so if you want to be more of a, respectful of the range, you try to buy it at the lower end of the range versus paying it at the upper end of the range when you see some reversal signs like we saw yesterday.
Oh yeah, no question about that. I wouldn't be buying here. I mean, the Euro USD, if I had no position, I wouldn't definitely be buying it here. There's no question about it. The risk reward doesn't make sense.
I think it does in cable. That was a pretty classic stop hunt. I've been waiting for that action for a week. And actually, Greg has a red stoplight on cable.
Yeah, cable candlestick both yesterday and today look bad. And yes, this is the exact same channel. I'm also monitoring. You remember, Dale, how many times we've talked about the channel.
Yeah.
You know,
They just
would
had
be
to take
super
those
cautious.
stops out, Steve. You know, I mean, it hadn't elected that double top was standing, and now they shook out everyone who had stops over that double top.
Yeah,
And-
although admittedly, cable is a very special case. I mean, you know, ahead of Brexit, I mean, it's a totally different beast, right?
Yeah, well, I guess, yeah. I think it topped.
Well, guys, I'm going to pass it over to you. I wanted to say thank you, everybody, for listening in today. And then also, I wanted to say that here's your bias chart. For those of you that want to be part of the Forex Analytics community, try it out. It's only $1 for 10 days. Or you open a Pepperstone account, go to the Forex sponsored page. They are the sponsors of this webinar. And then you can open an account right here and possibly get Forex Analytics for a few months for free based on how much trading you do. So, guys,
can you put the bias chart on one more time, please? Because I.
Oh, you were slow today.
Sorry. I got it. Thank you. I got it.
There's the lazy guy.
Yeah, always.
Anyway.
All right, guys. Have a great one.
Blake. You too,
Bye-bye, Blake.
I'll talk to you guys soon. All right. Thanks, everybody.
Thank you.
So, Guy, what lit up? I mean, was it, there's no news behind the rally in the metals today? Just, you know, squeezed all the shorts?
Well, there is a bit of risk on, and that always helps. But I think there were too many days of downside. It was DSI was very low. I think gold was in the teens. And, you know, you kind of expect something like that happening. Obviously, it's very difficult to time it.
Real yields seem to be about to break a bear flag, actually. They seem to be about to produce another leg lower, and more or less that's the reason, Dale.
That would help, yeah. Okay.
That's actually almost the only thing that matters.
Yeah.
So I think, you know, the evidence is still weak in the sense that, you know, I mean, we've been like 24 hours in this attempt of a reversal, but so far we have nice candlestick reversals. Here is a beautiful morning star formation on the daily chart of silver. Here is a morning star formation in the daily chart of gold. Here is silver, 4-hour chart.
We're at resistance.
Yeah, confluence of resistances actually, 38.2. And this descending wedge, question mark. So with, you know, real yields about to take another dive lower, I think it's a little bit early to say, because this is a move that, you know, has started happening like during the past 24 hours. But I think that, you know, we get another 24 hours of such price action, and I'm more or less convinced that we found a low.
Well, let's see. You know, I agree that we're going higher, but I do think my thesis is that we're going to see a dollar spike at some point. It's long overdue, and that's when I will start to look to get long again in metals.
Yes, Stelio, there is no disagreement there, although you know, doesn't necessarily mean that even if we get some dollar strength, metals will tank. I mean, we've seen cases that, you know, both the dollar and metals were moving higher. So I'm not so much disheartened by the probability of at some point getting a dollar squeeze higher.
Yeah, let's see. I'm going to buy either way. Where do I buy? It will depend on price action. But yeah, I'm going to get long again. Do I get long lower or higher? It doesn't matter really. It's just going to depend on.
It was a great trade, still.
I was.
In 24 hours, you know. We should all make 5%.
It was a great trade, but personally, I don't know if I would have got rid of it.
Well, let's see. But you know, I've been waiting for days and days and weeks.
I hope you get the opportunity to buy even cheaper, mate.
I will. I'm sure I will. Anyway, what else? Okay, a couple of things to note, just as a general thing. So there's Moderna and Pfizer, and they're trying to get EU approval for their vaccine. So that's pushing markets higher. And we saw equities yesterday, they were lower, but really there's no follow through. So they still look relatively strong, given that we're getting all these good news in terms of the vaccine and all that. It's not surprising. We had some data today. I know data doesn't really do much anymore, but we did have some, so let's mention them. The RBA kept interest rate unchanged. They didn't really give us anything new, so nothing really to say there. We did have PMIs in Europe, which came in slightly better than expected. UK as well, but on the other hand, Euro CPI, so inflation year on year, came in at minus 0.3%, unchanged from last month, and we were expecting a 0.1 increase. So that was a little bit disappointing. And clearly, inflation in the Eurozone.
For central bankers.
For central bankers, yeah. But clearly, inflation is a long way from their target. So there's no way they're going to be anything other than very dovish for the near future. And
pretty sure they would be dovish one way or another.
Either way, yeah. I know, that's a good point. And cryptos, I don't understand them. I really don't. That's why I don't trade them. But I have a few friends that actually, as it happens, a friend of mine yesterday called me. He's been long a couple of occasions, and he's done very, very well. And he was long again for the past weeks. And he said, "Look, I'm thinking about getting out." And we were like 19,000 Bitcoin, whatever. And I said, "Look, I think it's a great idea. If you've been long, just get out." And he got out yesterday. So I think it's just a crazy thing to trade. And whoever trades it, well done. You have more courage, let's say, than I do. I just don't get it. Otherwise,
it's another
You're gonna
word
say
you were
balls.
looking for. Yeah.
yeah, I didn't say that.
All right. I said it for you.
I hate trading something that I don't understand, so I'll just leave it for others.
Yeah, don't think that there are two types of people that trade cryptocurrencies, if you ask me. Those that don't understand them, but they have FOMO, and those that think they understand them.
Yeah, it's a big discussion, cryptos, and yeah.
In any case,
one of our friends here wrote, "I've been long since 2014." Well done for that. I mean, that's fantastic.
And why aren't you in a Caribbean island at the moment? What are you doing here?
Yeah, exactly. Otherwise,
he's given it back in other instruments.
Maybe.
I hope not.
Brexit, we're getting a few more little tentative headlines, and the Brits are playing hardball still. They're saying that we still are not there in certain major areas, and frankly, a no-deal Brexit scenario is not a disaster, and they keep saying this. So they're kind of playing chess a little bit with the Europeans and see where that brings them. But we have nothing yet. That's the bottom line. 1st of December, nothing yet. 31st of December is the deadline. So they're leaving it late. And that's it. I don't think I have much else to say today.
Okay.
Powell, actually, I think is testifying in about an hour or so. But
police to the police or what?
I think the Joint European Committee in DC.
Okay.
But yeah, I doubt he's going to give us anything groundbreaking either. That's it.
In other news, Yellen is now on Twitter. So.
Oh my God.
Yeah.
Yes.
Okay.
Oh yeah, actually, you're right. One of our friends just wrote that Powell's testimony is already available. Is it okay? There you go. So I didn't see anything being said about it. So I'm guessing he didn't say anything new.
Yeah. Pretty sure he's going to save us from something that isn't wrong, or
Yeah. Yes.
No, they're all, the Fed's worried about the next 3 to 6 months, and then they're optimistic. After that, they just think this this period here with COVID without Congress acting is going to leave a dent that when you think about it, they've thrown so much money at this anyway. Why not bridge it for another 3-4 months before we have a vaccine? Otherwise, all that money that they used before to support consumers, you know, the middle class, the lower class, small businesses that are on the verge of failing.
Yeah, the problem
Then,
is all the supporting of consumers. Consumers should not be supported. Consumers
yeah,
should not have been supported
yeah,
in any case.
but they
I
did
mean,
it, and now we're, you know, we have a vaccine on, you know,
yeah, but
on the horizon.
perpetuating what has already destroyed the mentality and has damaged irreparably the economy is not a solution to a problem, right?
Well, how
If
about
you,
small businesses? I mean, you know, that are on the verge of closing and they got PPE before whatever that program was.
yeah,
And, you know,
PPP, yeah.
they'll be gone. They'll be gone, okay, by the spring. So why not try and save? I mean, you've already made the investment. You know, what's the saying? Don't owe the bank a little bit of money, be into them for big money, and then they'll help you. It's kind of the same thing where, you know, why not bridge it until the vaccine now? It makes
In
it,
any case,
it didn't make sense before, but now
I
that
think
they've done it,
you're
you
right.
know?
I think it makes no sense to not do it. Yeah. I
Yeah.
think you're right.
yes, I mean, if somebody is looking to, you know, solve the problem by doing that, what you're saying makes sense. But you know, my belief is
Yeah.
that this whole attitude is what has created these humongous problems.
Yeah.
I've said it before. I'm not going to forget that, like 15 days after COVID began, I was seeing, like, you know, lines of cars for like free food in what was it, New Jersey or whatever, and the, you know, the cars that were in line waiting for food after 15 days that people lost their income were like 30, 40, $50,000 cars. How the hell can you have a $40,000 car and can't afford not to have an income for 15 days? Or the other lady that was talking to the reporter and saying that she was calling the line, you know, that was allocated for, you know, receiving help or whatever, and she was holding the latest iPhone that cost like $1,200, and she was explaining that, you know, she can't go through the next 15 days, and she's going to have to starve. And then, like, you know, why do you have a $1,200 phone
She
if you
didn't
don't
pay
have like
1,200 for it. She
yeah,
got a deal, and the cars, they have a $200 payment on 7 years
that
worth of
is
financing.
exactly my point.
Yeah.
You know what I mean? That is what happens when you quote unquote support the consumer. Credit used to produce income is a good use of credit.
Yeah.
Using
Well, just
credit,
let me just say one thing. Monetary policy, Keynesian or Austrian, did not create COVID.
yes, no doubt about it.
Okay, so it's a lot
But what it
different.
has created is the conditions that no matter what happens, everybody's unable to cope with it. Financially, I'm talking about, right?
Yeah.
I mean, if you went back to the America of the 50s or the 60s, is there any chance that people would lose their income for 15 days and they would need, you know,
Food?
municipals to offer food so they can survive?
Maybe.
No, I don't think so.
Okay.
Not people that are considered middle class, at least, right? Now, these people are
Okay.
considered middle class and they don't have, you know, money on the side to go buy for a single month. Who does that? I mean, there are people that are poor. Yeah, there have always been people that are poor, but people that are considered middle class and they can't survive 15 days.
Well,
Anyhow,
my mother raised us, and if she lost her job, we would have been in trouble. Okay.
yeah, she
So,
was obviously not
and
middle
that was in
class.
the 50s, I was born in the, you know, 53. So, you know, you're little, you know, fixed upon this policy, but there are people that work hard, and one bad break, they're only one bad break away from being on the streets. They're not all drug addicts that are out there that are homeless now,
Yeah, but
and
trust me,
alcoholics.
I've been through. I've witnessed that in Greece as well. I mean, before we
Yeah.
had the financial crisis,
Yeah.
banks were even giving loans to people so they can have summer vacations. Who goes into debt
Well, okay.
to have summer vacations? They
That's
were
a little
actually calling
different.
them.
Summer
They,
vacation and food.
they were
is a
actually
little
calling
different.
them diakopodania, which is like two words combined in one, which means vacation loans.
Yeah. Summer
So
vacation in Chicago meant that you had an air conditioner.
yeah, so you were getting like loans with like a 15% interest. So you were in essence, going into debt now, which assumes that you're gonna underconsume in the future, so you could have better vacations now. I mean,
Yeah.
who does that?
The Greeks,
No, almost everybody does that.
not for vacations.
As long as you give them that. Why is it different to go into debt to get yourself the latest iPhone,
car?
Dale?
Yeah, you don't
I mean,
need
if
the
you can't
latest
afford a
iPhone.
car, you can buy a used car. Why do you need
Right.
a $40,000 car if you really can't afford one?
Because you probably have to pay cash for a used car and can't get it financed.
If you can't get $5,000 to get a new one, you definitely shouldn't get yourself a $40,000 through financing car, right?
Yeah.
Anyhow, Bitcoin
Let's
getting
make money.
rejected. Bitcoin getting rejected from the previous high. Who knows? I think we might get ourselves here in a situation that we, first we cleaned out, the
Bears.
the longs, the people that jumped on the bandwagon, very late. Now probably we killed some of the shorts people, that saw that reversal and thought to themselves like, okay, this needs to go at least, towards like 14,000. So now with this higher high, we've probably killed those that came in, for a short-term trade to look, for another leg lower. And I wouldn't be surprised to see this happen once again, meaning produce a lower low now, and kill people that are jumping on the bandwagon once again. So I think it's quite a complicated situation. As you see, the same type of formation here in Ethereum, but in both cases, very, very clearly a big RSI divergence, right? Both in Ethereum and Bitcoin, a big RSI divergence. So I would be very careful in trying to buy them here. Although, keep in mind that, they're extremely volatile. Personally, if I ever decided to trade something like that, it would actually be to buy and hold for a period of time, because in all essence, volatility is nuts. I wouldn't want to be day trading this. At least not my style. There are people that love this type of instruments, to day trade them. Not my cookie. In any case, we already talked about gold and silver. I think there is a good chance that we might have seen yesterday the bottom. How are we going to know that that's the case? I think we're going to know within the next 24 hours. So I'm waiting, first of all, to confirm today's daily closes to be like bullish. So let's first wait, for today's candlesticks to settle, and I think we'll have already made a big step towards that direction. Now, as I was explaining yesterday, once gold and silver turn higher, platinum should do very well, and as you see, platinum is doing very well. Palladium, nothing really has changed. Copper, just on the train tracks, unstoppable almost. It's doing its thing. Crude oil, this is the fourth consecutive day of a consolidation, more or less. I'm assuming that this one is going to get resolved to the upside as well. Natural gas, more or less the same thing. Another day of consolidation, but I do think that the chances of resuming to the upside are much better than the chances of reversing lower. Let me go through. Platinum, I just covered it, mate. Mr. Steve moved to America. In some areas,
You'd fit in real well with all the liberals here.
Liberals, yes, absolutely. Libertarians, I don't know how many are left.
Yeah,
Um,
I could see you arguing on the beach with people. I'll come there, man.
You should actually. You
What do
should
you think of selling this rally in cable after last night's action?
listen. If you remember, I've been monitoring this channel for quite some time. I'm not persuaded by the way we're moving higher. So, in any case, from a risk reward perspective, I still think that the downside is more appealing. I mean, if you want to
Yeah,
take a trade right here, right now,
yeah.
if I had to take a trade right here,
Scale
right
it.
now,
Yeah,
I would actually short it.
yeah.
But admittedly, we have a binary event ahead of us, right? Anything
Yeah.
can happen, literally anything.
I
So,
know.
what would be a very easy trade for me to consider is not easy in this occasion because you can wake up one day
I know.
or blink at some
Yeah.
point and headline comes out that there is
You're
a lot
right.
of optimism that they're about to have a deal, and you might see cable trading 300 pips higher within
A
a
minute.
minute. Yes, exactly. So do you really want to be holding the bag? If that
Yeah.
happens, it's a tough decision, right? Because
Yeah. That's what holds me back.
I mean, the currency market is very liquid, but if there is such an event, there is a very big chance that you're not going to be filled, even if you have like a tight stop loss, right? The slippage
Oh
is going to
yeah.
be,
Good
you know,
advice.
amazing. So,
Yeah, that's good advice.
I think you need to consider very carefully if you want to do something like that. Now, speaking of the cable, it's worth mentioning, and I wanted to do that, the euro pound once again, because the euro pound, counting today as well, this is the third consecutive day that has been toying around with this trend line resistance. And I've told you before that this move lower, always made me believe that it's corrective in nature. So I think a break higher from here, and the 61.8 and the 50 DMA, both of which currently pass from like 90.28. I think it's going to be a very bullish development, and should see follow through towards at least 93 cents, which is the first target, but probably even higher than that. Perhaps even retest the March high at 95 cents. So this is something I'm also closely monitoring, and at least it is a trade. You have the Brexit risk, but on the other hand, if you don't have a clear opinion, or if you're afraid that dollar might rebound, soon enough, and you don't want to be short the dollar like just before it rebounds, you don't get any dollar exposure by trading the euro pound. That's the only sure thing. So some people might want to check that out.
Brian Blandon, if you're here, will you say something in the chat? Go ahead.
Let me see. Yeah, Quant Fiction. There he is.
Oh, okay.
He just answered back. He's under the name
Yeah, I
Quant
see him.
Fiction.
Okay.
Yeah. EG longs and cable shorts will get destroyed when they do the deal. Yes, if they do get a deal, they will. But that's an assumption, right? If because somebody can make the exact opposite argument, right? If there is no deal, euro pound shorts and cable longs are going to get destroyed. So it's a double-edged sword. Let me see what else. Natural gas, we did cover that. Euro Kiwi, yes. Let's have a look at Euro Aussie and Euro Kiwi, and we can then pass it on for the interview. So, unsurprisingly, look at Euro Aussie rebounding once again from this channel, right? I mean, this channel has been now really working since the middle of the summer. No, actually, quite probably the beginning of the summer. So look at it do its trick once again. I mean, from
Yeah.
a risk reward perspective, we said that as long as we're not breaking down, trading the other side, makes sense. And look at EuroKiwi also
Oh.
attempting to make a move out of this little descending wedge. Now, doesn't really yell to you that you should be turning bullish, but from a risk reward perspective, both of them are still looking good for
I like them.
yeah, for a short-term rally. If that's the case, usually, I mean, what will help those rebound even higher is if we see the indices pull back a little bit. Admittedly, so far no such indication, right? I mean, look at the S&P. Yesterday, at some point, it was plunging lower. It back tested this horizontal support resistance area, and near the end of the day, it actually pared back all its losses to close almost unchanged. Today, so far, pre-market, we also seem to be very well bid. And we've said it before, as long as we trade above this triangle, there is no real technical reason why somebody should be turning bearish. So, Euro Aussie and Euro Kiwi, we know that they're going to do well if we see some risk off, but I still don't see the signs
What's your
of risk off.
1.618 up there? The arrows are covering it.
It is at 38.23.
Okay, thank you, buddy.
Yeah, and I think we can actually do it, right?
Yeah, I'm thinking that now too.
I mean, for this market, 150 handles.
Yeah, so a few days.
Yeah, it's not a big deal, is it?
Yeah.
Yeah. Okay. So
right, buddy.
enjoy your interview, Dale.
All right, thank you, Steve. It was fun arguing with you again today. I always enjoy it. All right, Brian, I'm getting you set up right now, my trading warrior brother. And welcome to Face, Brian. Waiting for your mic. Unmute your mic.
Okay.
There we
Is
go.
everyone hearing me?
Got you, Brian. Nice
All
to
right.
meet you.
Nice to meet you as well.
Yeah, glad we were finally able to pull this off. Have you been in
I
Zoom
know
before?
it's been a bit of a process. Yeah, I've been using Zoom quite a bit actually.
All right, so why
started.
don't you go ahead and share your screen?
Sure.
And then I always start here, Brian. I'm interested in the long and winding road that people take to get from point A to B. And
Okay.
maybe you could tell us a little bit about what you were doing before you got involved in the markets, and did you have mentors? What was your first job? A little bit about your journey, buddy.
Yeah, no problem. So I am a mechanical engineer by schooling. That's what my undergrad degree is in. I'm in a master's program right now to get a degree in data science, but was hired out of school into a manufacturing engineering role. And but basically trading's always just been something I've been interested in. Starting in school, read the Market Wizards books, read Michael Covell's book on trend following, and then kind of just went down the rabbit hole from there. Started playing around in Excel, testing things out, and then eventually ended up going down the quantitative analysis / systematic trading path.
Okay. So why quant fiction? There's a lot of bullshit out there.
Oh, well, I mean, the real story is I was trying to, it all started, I was trying to write a blog, like a trading blog with just some of the ideas that I had floating around. And I was just going through names and basically just brainstorm a bunch, and then everything else was either taken as a domain or the domain
I
was
see.
extremely expensive. So this is kind of the one I ended up with.
All right. Okay. So process of elimination.
Yeah, exactly. It was the first one
All
that wasn't going to make me pay thousands of dollars.
All right, Brian. So, I mean, this is an interesting thing. chart that you have up here is kind of like people who follow, what people are Googling. And
Exactly.
you're doing it with Twitter. So why don't you explain what the dotted lines, the solid lines,
Yeah,
and
sure.
what you were seeing here that maybe gave you hints of a pretty good blow off bull move in Bitcoin and what it might be saying now.
Sure. So this is basically a couple of different sentiment indicators, and I thought it was just interesting to pull up because it's not exactly what one might expect right now. I could pull up a longer term chart as well, just to kind of give some context. So this is a Bitcoin chart. Looked like we had like a pretty solid rally for almost a month, and then the first real correction over Thanksgiving, and then a new rally up to all-time highs yesterday, and then a bit of a dump this morning.
Yeah.
So against that price action, this just there's two indicators here. The first one being a sentiment score, which is collected from a Twitter social media feed, and then that has some natural language processing in there that determines whether the sentiment contained in the tweets about Bitcoin is either positive or negative, and then compares it to the previous 20 days. So this solid line is a sentiment, and that's actually a relative score. So the last reading was 59. So basically it means that compared to the last 20 days, it is slightly more bullish than average. And I just thought it was interesting to note because typically when you see run-ups, especially to all-time highs like we had yesterday, you would expect a lot of euphoria and positive sentiment in the market. But we see that over the past 2 days, it was hovering in this low, below 50, like 40s range. But I thought it was kind of interesting, which doesn't really support the notion of a blow-off top from sentiment perspective. And then also what you would expect to see, this dotted line is just Twitter volume. So these are all the tweets talking about Bitcoin. And again, you see from starting about the 27th, there's this gully basically of tweets about it, and then it ramps up in the past like 48 hours or so. So that's just an interesting backdrop, and you see the tweet volume gathering here, so that might be something to watch.
So would you interpret it that there's not euphoria after a euphoric move as being bullish because it's not being the rally really in the last few days really hasn't been embraced?
That would be my interpretation of it. If you're looking for a blow off or a topping process, I would expect that to happen when the most people are euphoric or bullish, and there's no one left to buy. So that's the backdrop from just a sentiment perspective. I think that's always a good place to start, just to get a read on where the rest of the market kind of thinks. And then the rest of the analysis I'm going to go through are just a few different statistical reports from Market Science, which disclaimer is a company that I help run, but this is also what I use for my own daily trading process, so it's just one and the same. So here we have just a look at what happened yesterday in Bitcoin, and we see that the volumes and the range for yesterday were higher than normal. And based on some research that we've done, when those conditions occur, usually is a setup for a choppier day. And by choppier, that's just indicating that there will be more movement relative, more intraday movement relative to the actual close to close movement. So you would expect a wide range and then a close closer to where the day started. And I'll go back to a lower time frame here. And so you can see that, I mean, almost we start the day at the midnight open, or the midnight UTC open. So it's about 9 Eastern time, and we're 5 hours behind the UTC. And you can see already today, that's basically what's happened here. Traded sideways for a bit, got a run up by a few hundred points, and then this drop. And so in a chop day, what we're looking to do is fade the extremes of the day. So we have our projected range here, and then this just gives some like confidence bars on today's range. And so we're looking at a maximum of price about 18,000, and then the high being like 21.4. So anywhere towards the extremes of these ranges are where we want to fade. And I just have the weekly open marked off as a level. And actually, while we were doing this webinar, I was doing a bit of buying around like the 18.5, 18.4 level, and we're
Okay.
trading at 18.8 or so right now.
Okay. So
Um,
I'm getting a comment from one of our attendees, Alicia. Didn't the British government restrict their hedge funds and investment advisors from selling products related to crypto? I think they have until Jan 6 to liquidate their positions in crypto. Is that going on?
I am a American resident, so I really am not sure what the regulations are. I'm
Okay.
sure each country kind of has its own
Yeah, well, you would
regulations
think it
on
would
it.
have an impact.
Well, that's true. There's a lot of things I would think would have impacts, but
And they don't. Yeah.
yeah, you'll see exchanges get hacked, or millions of dollars worth of Bitcoin get lost somewhere or stolen, and you would expect price to react, and sometimes it does, sometimes it doesn't.
Okay. So are you mainly in the crypto space? Is that your wheelhouse for trading?
Yes, for the most part. And mainly the reason for that is that the data is either cheaper or free from most of the exchanges. And there's also just a lot more data available for most of the exchanges.
Okay.
So from an analytics standpoint, it's just nice to have more information available.
Okay.
But
So,
I mean, I'll speculate occasionally in the traditional markets when things get like way out of whack. I was more active around March when a lot of forced liquidations were going on, just because a
during
lot of
COVID.
things
Yeah.
got completely mispriced. Yeah.
Okay. What is XBT again?
Oh, this is just a different symbol. A lot of the like derivatives and futures products will use XBT as opposed to BTC.
Oh, okay.
And if you look as well, like the CBOE products will use XBT, where CME uses BTC. So they mean the same thing. It's kind of
Okay.
like XAU for gold.
All right. And
X.
does your stuff mainly give you ideas for what kind of time frame trading, for day trading, swing, position?
Yeah, so predominantly, I guess you would call it day trading. The focus is to get an idea of what I expect to happen over the next 24 hours. So every day at the close, in this case would be 7 p.m. Eastern time, 6 p.m. Central time is the midnight UTC close, and that's what most of crypto uses because it's a global 24/7 exchange, and they need one kind of settle time. So that's what's typically used. And then we're looking at what we expect to happen over the next 24 hours in terms of price direction, the price range or volatility, and then also the trendiness or choppiness. And it's between those three characteristics is how we're trying to form trade ideas.
Okay.
And then, so I touched on the first two parts. We're projecting this 24-hour block to be choppy, so we want to fade extremes, more of a mean reversion style. We have our ranges, projected ranges marked out, and then we also have just a few just statistical edges. These are very simple signals that we look at. So basically, we're in the upper half of the recent range. We're closing above most of the popular moving averages. So this is a weekly VWAP, monthly VWAP, 100-day moving average, 50-day moving average. And then both the short term and I guess medium term RSIs are elevated. And then this just highlights what has happened historically when those conditions are met. And we can see that there's a positive or a bullish edge indicating the Sharpe ratio is higher than just buying and holding when all of these conditions have been present. So that's giving us a bullish edge, and why we're focusing on buying dips as opposed to selling rallies.
Okay, and I see a fractals up there. Are fractals part of quant analysis?
Not traditionally. I think this
Right.
is just something that's more interesting. I don't know. This isn't like systematized
Right.
in my trading per se. This is just if everyone can see, this basically just looks at the past 30 days and the price action, and then there's
Uh-huh.
just like a simple machine learning algorithm that looks at all the prior days and tries to find instances in the past that are most similar to the recent price action, and then looks what happens the next 24 hours. So here
Okay.
we can see like when we have this rally, most frequently, well, I guess there's no strong edge here. It looks like we have 3 days that had positive returns, then 3 days with negative returns. So there's no, I guess, strong edge there. And then this just maps out these instances on a longer term price chart. So you can see if these patterns or fractals occurred, like if all 6 of these were to happen at local tops or absolute tops, that might be telling. I'm not seeing anything super conclusive here.
Okay.
And then just there's also a analog of that for the low time frame as well. And this just
Okay.
does it on an hourly basis. So
Do you have a, go ahead, Brian.
that was most of the plan.
Okay.
There's also a few different stats I tend to look at just for day of the week biases, but there's really not anything. Today would being Tuesday,
Yeah.
nothing really stands out.
Do you notice
special.
reverse? Are you a believer in turnaround Tuesdays?
I've heard the term. I would
You haven't
have
noticed
to.
reversals on Tuesdays?
Yeah, so here's this performance by weekdays over the past
Mhm.
365 days. And it looks like Tuesdays have been positive over the past year. So I can't say it's a turnaround Tuesday, but also displayed our confidence intervals. And what this says is if anything falls within these bands, the effects could essentially be attributed to just random noise. And you can't say for certain whether this is like a true day of week effect or it could just have been generated randomly. So not a lot of confidence in that.
Okay. So do you have a business model? Do you teach? Do you have a subscription for people to receive your work? I went to your website. What do you do besides trade your own account, Brian?
So
Anything?
all the reports I've shown are from this company Market Science that I run with another trader. And this is
Okay.
just a monthly subscription. Unfortunately, our Black Friday sale just ended, but I can give a discount for anyone who's interested. If you just use, we'll just do FACE, FACE, as a discount code. We could do 20% off for anyone listening who's interested in subscribing. But
Okay, where did they go to? www.marketscience,
That's correct. Yep.
marketscience.com? Okay.
That's yeah, exactly. Marketscience.com with 2 S's.
Okay.
And
Marketscience.com. Okay.
includes all the reports I've shown. We also do a weekly report dissecting the commitment of traders report that the CME puts out for Bitcoin futures. And then there's also a series of longer form research articles that go into the data and explain why we do what we do and why we believe the statistical edges that we come up with.
Okay, Brian. Well, I really appreciate you coming here. This is, I'm kind of a chart guy.
I know.
But I'm open and believe that there are many ways to approach markets, and here's one. And let me ask you this, it's kind of a key question. When you're using this type of quant research for trading ideas, how do you quantify risk?
So typically in my own trading, I would just risk a fixed proportion of
Okay, like
capital.
1-2%.
Yeah, exactly.
Okay.
Well, I guess that's tricky. That's an approach. Like the systematized work I do, there's calculations that go on in the background that kind of calculate the ideal position size, and that
Okay.
that's available. Those are free articles that I just have on my personal blog. So if
Okay, so
anyone wants to go to
quantfiction.com is a
quantfiction.com,
blog. Yeah, okay. Yeah. I yeah.
and
Okay.
there's a series of articles on position
Yeah.
sizing for practitioners.
Okay.
And so those 3 articles essentially address the Kelly criterion, if anyone is familiar with that, and some of the drawbacks and flaws that people typically run into if they apply it strictly, and then an alternative approach to the Kelly criterion for sizing positions.
Okay. Well, thank you so much for coming here and edifying the community with, your approach to crypto. And it was really a pleasure meeting you. Thank you for your time, Brian. And I wish you continued and a lot of success going into the rest of 2020, and may blockchain profits just rain down on you and all the people you work with, and all your subscribers. Wish you guys the best. I'm rooting for you.
Well, I appreciate that, and same to you and your face community.
Okay, Brian. So again, everyone, you could find Brian on Twitter at QuantFiction, and if you want a subscription, can you give that that website address out one more time, please?
Sure. Let me see if I can get it in the chat here.
Yeah, maybe you could post it on your way out.
Yep, no problem.
Okay. All right. Well, thanks a lot, Brian, and appreciate it. I'm glad that we were able to have a discussion today. And Merry Christmas, Happy New Year, buddy.
Yeah, happy holidays, everybody.
All right, everyone. That's Brian Blandon, and now you know where to find him. And a very interesting way to approach trading. And if it's appeals to you, I think that's why I do these, because Jack Schwager says find a style that fits your personality. Maybe quant is for you. And Monica liked it. Okay, everyone liked it, and that's it. So enjoy the rest of your day, everyone. We'll see everyone tomorrow. Remember, don't just count your cryptos, count your blessings, and we'll see everyone tomorrow. Adios. You're welcome, Laura, Monica, Desmond, Louis. Adios.